In this video, I want to give you a tutorial on reaction point, describe to you the information that's going to be provided by the software, and also show you hopefully how you can use this information to enhance your trading performance. First, I want you to take a look at the charts themselves. You'll see that they're gold in color. That means the market is in a bearish mode. We'll look at sells only. And this is based off market structure itself. And that is based on how patterns relate to each other. Now you'll see over here it has just shifted to green. That means that the market structure is shifting and turning into a bullish mode, and we'll start looking for buys. As long as they're green, then they're in a bullish mode. Next thing, I want you to look up in the upper left hand corner here. You'll see signal pattern neutral. Now right here, that is also signified by the white lines. This off of this pivot, you'll see this diamond that highlights the high pivot. And these pivot points, this is the price sequence that it looks at. We don't look at one pattern, we look at a price sequence. And is starting to form a brand new pattern, what we call a reaction swing. A reaction swing is really the key to all of our analysis. And if you're not familiar with the reaction swing, we have more information on our website. Also, on our website, you'll see how you can join our weekly educational tutorials where we go into much more in-depth on this type of analysis we use as a foundation to reaction point. But also you'll see the gray shaded area. This is what we call our price projection. And that is based off a pattern right here. Based off this pattern, it gave this price projection, and we were looking for the market to move into that. And this is where the time and price come together and you have a reaction point. We were looking for the reaction point. That's where the name of the software comes from, inside of this shaded area. And that usually means that you're going to get a short-term or even a long-term change of trend. And that's what happened here. It pivoted high and then came on down. So as expected, the market did move up in here and you had a short-term reversal. Now it's forming a new pattern and it's highlighted by this line right here. The next thing I want you to look at is price flow indicator. It says buy. That means it's in a bullish mode. So we want to look at here. If the market confirms this pattern by taking out that white line, we want to buy. So we're in a bullish mode. The price flow indicator is based on price action, and it is based off recent price action. So it's a very sensitive indicator that you want to combine with the price patterns here, the trends, and the signal patterns. The next thing you'll look at, I have B count forward, A count forward. Now, as of right now, they're unconfirmed because we have the pattern is still in a neutral pattern, but we have a bullish bias, so we're looking to buy if it takes out this area right here. Now I'm going to move on to the next slide where you see the same gold. It's the same chart pattern. Now I've moved to the next slide, which is the exact same pattern we had right here. This arrow, this was the highlighted the reaction point before, where we talked about the market moved up and started to come down. We had the white line right here and white line right here as an unconfirmed pattern. But what happened is it never triggered the buy. It did not break above there, but the market continued to drift lower and it came down into a critical point and then turned higher. Well, what happened when it turned higher? You see now we have green line. It's a solid green line and a dashed red line. The solid green line and red line means that the reaction point pattern has been confirmed. And you'll see it's a signal pattern buy upward trend. So when it breaks it, that says we're going to buy. And then also the price flow indicator buy bullish. Also notice that the chart is green, bullish mode. So all three of them are telling you to buy. That's a pretty strong indication that the market should move higher. Now that this pattern has confirmed, the software will go out and will look at the past action and use that information to make the future reaction. And that's where we come up. The B count forward, you'll see it says 8 bars from now. A count forward, 10 bars from now. And that means the B is 8 bars from this price bar here and 10 bars. That is a shaded area. So there is your time projections. It's suggesting that the market will move sideways to higher into this time frame. The next point you'll see is this slanted right line right here, that's based off the same slope right here. This is what we call our price target. See where it crosses, it's anchored. What we do is we take it, we anchor it right on this line, and where it crosses the shaded area, this is your price target, this is your time target. Where they come together is called your reaction point. That's what we're looking for. If everything comes together, we're looking for the market to come up, hit the red line somewhere in this shaded area. And that will be 8 to 10 bars from now. So not only does the slant give you the direction of the market, right here gives you the time, this gives you the price. That's where reaction point stands head and shoulders above all others. It gives you the 3 essential components you needed for a successful trade. Next direction, time, and price coming together. It's the same chart. I've just blown it up so we can illustrate it, see it better. Now also, one thing I pointed out, you see this right here, these diamonds, that is the pattern sequence. That's the past sequence it uses to determine the future price reaction. You can see how the market did move right up into the shaded area, and it hit the line right here all together. At this point right here, the reaction point. They all came together, and as expected, the market did reverse and it started to come on down. So that has completed this trade